If your business finances give you a headache, if you always find it difficult meeting up to deadlines for the different filings you have to do for a business, if gathering records and co and all that gives you stress, then you should give me your attention. Give us your attention for the next few minutes. This is the Tech Your Business podcast where we break down technology, inform you about the latest in technology to help your business learn more, earn more, and do more. My name is Peter, and today we'll talk about getting a handle on your finances with technology. This will be a guest episode, and we'll be speaking with Rayhaan Mughal, who is the founder of Sidekick Accounting. So, welcome to the show, Rayhaan.
Thanks for having me, Peter.
So, Rayhaan, in the aspect of finances, I understand you've worked with a couple of businesses, especially digital agencies. In the aspect of finances, what's the biggest issue you've seen businesses have to handle?
If we just go to the root cause of all the problems, it's usually a result of a business that's started up. They've worked with an accountant who maybe they've seen down the road or was the most convenient option, and they've never revisited that relationship. And the challenge they face is as they grow, that accountant is no longer suitable for their business and where they're trying to take it. So they end up getting very frustrated and confused about not having that support that they need or access to the knowledge that they need in order to get over that hurdle and hit the next level. And that challenge can span across numerous areas. It can be very much tech focused. How do we put in place the right operational finance systems that help us to get insight and visibility over our business, and also operationally efficient. But it can also be from a tax point of view. So you start a business and you're pretty much set if you take a tax efficient salary and dividend, which most accountants would do for you. As you grow your business, and especially tech businesses that are potentially working with clients in multiple different countries and different legislations, your tax strategy as you grow becomes much more complicated. And if you're just following that basic strategy that suited you as a startup, you're going to be spending tens of thousands of pounds in tax that you don't need to pay. And again, frustration because you don't understand why. And usually it's the result of not revisiting that relationship or not revisiting who you're working with or not revisiting where you're getting that expertise from in the first place. So yeah, there's a wide spanning list of challenges I think businesses face as they grow, and a lot of it comes back to is the support you're getting right now and the people that you're talking to enough for you based on where you're going.
Yeah, I think that's one thing we don't really talk about because they say most of us are we make our decisions automatically. So as far as you've not really had any big issues with your accountant, you're likely to just keep renewing that relationship going forward without thinking if it's really efficient for your business or not. And when you talk about that tax strategy issue, it's something I really deal with a lot because, like for me, I'm resident in one country. My business is incorporated in another country where I was resident before, and I do business with other countries where I'm not resident. So it gets really funny. It gets really funny once in a while. It gets really funny. So talking about the tax strategy you mentioned, do you have any examples that can make it more, at least an example that can make it clearer to see where a business owner might be losing out by not taking this into cognizance?
Yeah, I mean, the most common and really straightforward one to fix, even that maybe some of your viewers can go ahead and implement, is we see a lot of digital businesses who we start to work with incorrectly charging VAT on international services, for example. What that means is that they've put their 20% on everything, including stuff that's going outside of the UK, and they're paying that to HMRC. And this can be worth literally hundreds of thousands of pounds a year. And it's just having an awareness of the rules that apply to your specific business based on where you're doing business can literally save you, six figures a year. And I've seen that happen for clients that have come on board. So, at its most basic level, are you just simply applying the tax rules as you should to the way you're operating? Beyond that, you can get much more complicated and less generalized and more specific to someone's challenges. For example, yourself mentioning you've got a business incorporated elsewhere, you're a tax resident somewhere else, now you're in the UK. That requires a very bespoke strategy. And that may come down to having a group structure in place and having an entity offshore plus a UK one, and then you can recharge some costs. And maybe Peter wants to move to Dubai, in which case there's a whole bunch of other opportunities around how you can base yourself there and have your company in the UK and have your other business somewhere else and filter, or do business through these multiple entities in the right way that mean you're paying minimal tax personally, but also as a business. So tax, there's three levels to tax, and most people are at level one. Level one is compliance. So are we filling the boxes correctly, and are we following those rules in terms of what can go through your business and what can't? That's basic level and where most businesses sit. When we want to start talking more strategically about someone's specific situation, we move into consultancy. And that's, again, looking at your example, Peter, you are resident in the UK right now. Previously, you've been resident elsewhere. You do business in all of these different countries and you've got an entity here. How do we structure things for you? So we consult on that. And people often don't get to that point. They're always stuck at the compliance level. But then the third level, and this is where the real value is, and this is where the tax planning that saves 6-7 figures is tax advice. So once you've had that consultancy to say, this is your situation, this is where the opportunity lies, this is how you can take advantage of all of these things, then you go on to advice. So you say, okay, I quite like the idea of doing this, therefore I want to take that further and implement it. And then at that point, you dive really deep into this niche area with an expert who can give you specific advice around that small thing, and you can put that in place. And when you get to the advice level, it's about saying, okay, this is how you need to restructure things. This is the legal considerations and the tax considerations. But also, once you're at that level, you can say, by doing this, you're going to save, I don't know, £50,000 a year, for example, whatever it might be. So we want to it's a pyramid almost. So compliance, very broad. Consultancy takes it up a little bit. You're going beyond just, can I put this lunch through my business? And then advice is saying, this is exactly what I want to do, and I need to know the exact implications of doing it, and then I want to implement it. So people are at level one, but we need to get people, especially businesses that are growing and scaling, up to level three.
All right, so we talked about the three levels: level one, compliance, consultancy, and tax advice. So let's talk about compliance. With compliance is basically where the business owner has to tick those boxes, that's the regulatory boxes, like filing of VAT returns, filing of payee returns, and the basic things they need to do to stay on the good side of the law. So what consequences have you seen? Because a lot of people are always doing these things last minute. A lot of them end up filing incorrect or incomplete records as a result of this. What are some consequences you've seen from this not being in up to par, not being on top of things as regards compliance?
So, I mean, the first and probably most impactful part for any business owner is, by leaving it to the last minute, you are 100% throwing money away on taxes. Because if you're only reacting to what's happened, and it might have even happened over a year ago by the time you get to the end of your filing deadline, you can't do anything about it, right? So, like you said, you're kind of scrambling because you have a deadline and you're putting through whatever you can. But when you're in that mindset, and when you've already done all of these things over a year ago, you can't really do much to pay less tax, right? You can probably find some subscriptions that you paid for and didn't put through that might save you £2. But if you really want to make an impact on your tax bill, it has to come from the other angle. So if you flip it on its head, it has to be proactive, and it has to happen 12 months before your filing is due, right? So at the beginning of your financial year, in order to plan to say, this is what you're going to achieve personally, this is what you're going to achieve within the business, and this is what the tax strategy looks like to make sure that that's minimized. By doing that, you've then got full predictability over your tax liability in 12 months in advance. So you can start to save up for that and put that money aside. And you're also able to make sure that everything that you planned to do is reflected within your tax return and filings, so that you are actually taking advantage of what you've decided is the optimal strategy for you. So the biggest impact of leaving things to the last minute is you are 100% throwing money away. There isn't any other way to cut it. Secondly, leaving it to the last minute, often what you'll find is accountants are going to prepare those accounts for you a lot of the time, and they're going to share those with you. If you've waited till the last minute to provide them with everything, they've probably got questions they want to ask, but you're up so late on in the process, they might not ask it because it's probably better that they file it, right? Because if you don't file it,
Yeah.
you're going to get fines, and they're going to get it from you probably in terms of complaints, and the expectation
Yeah.
is there that they should have filed it. So everyone's scrambling, which means you're not asking the right questions. You're not doing things in a structured or even sometimes logical way because you're just trying to fill the paperwork out. And then that's talking about the company. If you think about the implications of filing PAYE and VAT late, which are often monthly or quarterly, you are really opening yourself up to the risk that HMRC will come after you for not just the amounts you owe, but if you're late enough or too many times, you get now for VAT penalty points. And there becomes a point where if you've accrued so many penalty points, you get pretty massive fines now. But
Oh,
also you're going to get HMRC on your back in terms of you need to fix this, otherwise we're going to go down all of these various remediation routes, which eventually can lead to your company being wound up. So consistently late filing puts you in a bad bucket with HMRC, which basically then triggers them to go down a path of increasing resistance to the point where I've actually seen a business get liquidated because they've not filed
wow.
VAT and PYE. So
Um,
it's much better to just be on the front foot, to file VAT, PAYE well before the deadline. Make sure you make that payment as well on time.
yeah.
Otherwise, it's just a rabbit hole that is very difficult to get out of once you're too deep.
Interesting. All right. So, in answering this question and the previous one, you've talked about forecasting, forecasting and budgeting more than once, where you talked about um, knowing, not waiting till the end of the year to know what taxes you have to pay and things like that. So, how important is forecasting and budgeting for small businesses?
Um, Very important, uh, especially when, as is the case with most small businesses in the UK, when an individual's income and lifestyle is so closely linked to that business. If you don't have a budget or a forecast, you don't have predictability around your personal income, and it's very stressful and often difficult to make life decisions around, should I buy a bigger house, or should I put my child through private school, or we need a bigger car? It's very difficult to confidently make those decisions in a stress-free way if you don't have predictability around what your business is doing and how it's doing it. So that's probably the most impactful reason you should have some sort of budget or forecast, because it's going to help you sleep better at night. Just having that bit of predictability. Um, if you kind of remove that element of things, uh, I personally feel like if you don't have a budget or a forecast and you're trying to grow and scale your business, you are purely relying on luck. Because if you don't have visibility of how your hiring decision impacts cash flow for the next 3 months, or how investing in this new marketing strategy is going to pay off, and how long it will pay off, and what your assumptions are behind that, and you're not measuring those things against a benchmark and a set of assumptions, it's very, very easy to just go off on any tangent at any time and essentially throw money away without understanding the impact of those things you're investing in. So in order to scale a business predictably, and in a way that is sustainable, you need to have a budget and a forecast that you look at regularly and measure yourself against, because that's your guiding light. That's how you're getting to where you want to go. And that's had the thought process behind it in terms of, to get there, we need to do this, this, and this. And if we do these things, we know we'll get there profitably and sustainably, and we'll be achieving everything we want to achieve. Just simply saying, I'm going to grow and I'm going to double profit, or double revenue over the next year is very wishy-washy. You can double revenue, but anyone can double revenue, but you can also double your loss.
Yeah.
If revenue is easy to scale, profits are difficult to control. So budgeting and forecasting is all about making sure that the impact of that growth and those decisions that you're making are actually resulting in additional resource or additional whatever it is at the end of it, whatever the goal is of doing that thing. You need to be sure that it's actually going to materialize and track yourself against that.
I like the answer, especially when you talked about that doubling your revenue and doubling your losses. I've been there before. I had an e-commerce business about 10 years ago, and we used to make a lot of money. We used to ship so much every single day. And at the end of the day, we did accounts, and I was wondering what was wrong.
Yeah. It's nice, right? Revenue is like a nice vanity metric. Everyone likes posting about it on social media, and it feels good, right? If you can say our business doubled in size, but did it really? If it's not cash in your bank, probably not.
Yes.
Probably more stress and less return.
Yeah, because I keep telling people that at that point I had a couple of businesses, and I found myself taking money out of one to support that one. So end of the day, I was just net zero personally. There was nothing for me, and it was just a lot of stress for nothing. So when you talk about this forecasting, you also talk about predictability, which is one, especially for consulting businesses and agencies and co. You have this, they call it the feast of famine sex cycle, where you markets, you get a client, focus on the clients, and when you're done, you don't have any clients to go back to, and you now go back and it's all crazy. So this talk about forecasting and predictability really covers that. So can you recommend any techniques or tools that can be used to create accurate forecasts and budgets for a business?
Yeah. So look, I mean, people. I think a big blocker to people actually budgeting and forecasting is that they think it's going to be some stupid complex process that they're going to have to dedicate a month to learn and everything else. So what I always say is, if you don't have anything, the best place to start is literally open up Google Sheets and put in revenue. So how much do I want to make each month for the next 12 months? What's my typical cost to do that work? If you're an agency, you're going to use freelancers, you're going to have ad spend, you're going to be paying all of these things. So just benchmark, baseline that firstly, just to say, I want to deliver X amount of revenue and I want it to cost this much. That is the most basic form of a budget, right? It's saying, if we make £20,000 in this month, I'll be happy that we spend 4,000 on freelancers, for example. So it can really be that simple to start with, and then you build that out. So that's your revenue cost of sales, which gives you your gross profit. And then you can literally just add a row for everything that goes out of your business. Get your bank statement, go through last month's bank statement. Okay, I spent £10 on ChatGPT. I spent £1,000 on my office rent. I spent X amount on this, and this, and just build it out in that way. See what falls out of the bottom, and that's the best starting point. Once you've done that and you're kind of comfortable with what a budget or your forecast is, then you can look at tools and some great tools. There are some great tools out there. They rely on having an accounting system in place, and that's where something like Xero comes in. So something like Xero is a fantastic place to store all of your financial data and automate and streamline everything. But it's only as good as it is maintained. So if you're not going to go into that system every month, or your accountant's not going to go into that system every month or even week to reconcile it, those numbers are useless. So if you're not prepared to go that full way, start with a spreadsheet. But then once you have an accounting system in place, there's some tools like Float. Float's an amazing cash flow forecasting tool that pulls your data from Xero. So it looks at your actuals, it looks at what's going through your bank on a daily basis. And then it lets you form pots and budgets around, okay, I spent £2,000 on subscriptions last month, but my budget is 2.5, and you can really visually just see that gap, or the other way around, maybe you've overspent. And it then pinpoints you to the areas you should probably look into to understand where you're overspending and why. So Float's really, really good for cash flow forecasting. For general forecasting, at maybe a bit of a more macro level, we use a tool called Fathom. And again, it relies heavily on Xero. But Fathom as an add-on is a great tool for reporting, but also for forecasting your P&L. It lets you put in place scenarios so you can model through the impact of decisions that you're making today and understand that future impact. So, for example, if you're looking to hire someone, you can create a scenario within this tool that says, I hire this person in June at £50,000 a year. What does that mean for the business? And it will just wash all of that through. And then you can say, okay, if I hire this person, it's going to mean that I can add, I don't know, an extra £10,000 a month of revenue. So you can then model that 10,000 in. And then you can start to understand the full impact of those decisions before you actually make them. And that's really where we want to get to, and every business should try to get to, because when you have that level of predictability, decision making becomes so easy because you're able to just predict the future almost, right? You can say, if this happens, and I'm confident that this will happen as a result, then this is the impact. And then that impact is either positive or negative, right? And if it's negative, then you can say, okay, this probably isn't a good decision to make in the first place. If it's positive, you understand the magnitude of that, and you can start to say, okay, in the best case, we can do this. In a worst case, this will happen, and you can start to do different scenarios and stress testing. So when you do make that decision, you're doing it from a place of data rather than just your gut instinct. And again, that comes back to, like, as business owners, we want predictability. We want to be able to sleep better at night. We don't want to be worrying about the business. By going through that exercise and having that in place, you are literally taking all that sort of fatigue and anxiety out of decision making.
Interesting. I was actually caught up in that answer because I never really looked at it that way, where you say, okay, you want to hire a new member of staff at this month, how it looks in the future. That's one thing that you, as a business owner, you probably will not think about, and that's why you always need someone to always look at your finances and make sure you're making the right decisions, because it might look like maybe £2,000, £3,000 a month, might look like a small thing, but it might impact your business negatively if you don't plan properly. So we've talked about some tools. You talked about Zero and Float and Fathom that pull from Zero to help in forecasting. So for the other parts of managing a business, for the keeping of tracking of expenses, invoices, maybe automation and co. What are some other interesting tools and technology that can help business owners streamline their processes, their financial processes?
Yeah. So once you've got your system in place, like Zero, that's really the core of everything, and that's you want to pick your accounting system based on what else it integrates with and how it can basically automate your accounting, right? So for us, that's Zero. We use Zero for all of our clients because it's got the biggest ecosystem of add-ons and apps. So once you've got that core system in place, then we've spoken about what comes out of the other end of it, right? If you've maintained that data, but the difficult part is having that data maintained in the first place. So if you take one step back and look at the sort of beginning of that process, it comes down to how are you getting a good feed of data into your accounting system in a way that's not a full-time job for you, right? And we use something called Dext. Again, we use that for all of our clients. So Dext it's a light AI-driven piece of software that lets you upload receipts and invoices and other things, that you might that relate to transactions day to day. And it uses AI and character recognition to basically read that document, publish it into Zero, which means then the reconciliation in Zero is much quicker, and you can match it off with your bank statement, and that's your accounts up to date. So in order to have an efficient finance process, you need an efficient flow of data, and that comes through a tool like Dext that's set up in the right way and integrated with your accounting system. Once you've got something like Dext in place, it's really easy to then set up a bunch of automations to send certain invoices every month into Dext, and to send or to link in with your suppliers directly, or to ask your suppliers to send their invoices straight to Dext, for example. So there's once you have that system set up, you can have a very, very hands-off bookkeeping process that will give you real-time data within Zero, which then helps you to do all of that other stuff that we spoke about in terms of forecasting and budgeting and reporting. So Dext is a really great tool. There's a few alternatives there, but Dext it seems to be the most powerful in terms of its ability to save you time. And then there's the automations on the back end that you can do within your business that integrate your existing systems with that accounting tool. For example, we work with a lot of agencies, and agencies tend to work with a lot of freelancers. So one challenge that agencies face is some of these freelancers are very small and they maybe don't want to issue an invoice, or they don't know how to issue an invoice. So we help them build portals and like front end invoice submission forms, essentially, right? So they can then say to all of their freelancers and suppliers, here's a link. You just when you're billing us and we need to pay you, fill this form in. That form then generates an invoice that gets sent into Dext automatically. Well, no, there's another step. So that generates an invoice that gets sent to the business owner to click approve. And once they've approved it, it then gets sent into Dext. And then once it's in Dext, it gets sent into the accounting software. And then once it's in the accounting software, we're really quick to just reconcile it, which means that freelancer that didn't know how to invoice as a result of tech is able to just fill in a form, and then that's accurately reflected in your accounts, right? So if you imagine that for like agencies that deal with a lot of influencers, again, influencers don't necessarily invoice very often. They're not business minded. They're just providing that service usually on a part-time side hustle type basis, right? So if you think about an agency that's dealing with 100 different influencers every month, the overhead involved in saying, hey, can you send an invoice so that I can have my accounts accurate is massive, right? But if you just build a simple solution like that and know how to link that all the way through, it's infinitely scalable, right? It's self-serving on the external party, but it gives us all of the data we need in a streamlined and automated way. So I think with accounting, it's becoming. We spoke a bit about the compliance, which is where a lot of people are right now. But it's not about compliance; it's about tech. It's about having good data that helps you make decisions and setting up operational tech that does that efficiently, so that nobody is spending hours, flicking through receipts. And you're spending time on the more valuable side of finance, which is the forecasting, the reporting, the budgeting.
Interesting. I think that's a very interesting, a really eye-opening answer, because like you said, a lot of the freelancers, a lot of the influencers, they just want to get paid. They don't really want to get stuck in paperwork and all that. They just want to do the job and get paid. So I wanted this episode to come up with a lot of takeaways for any listener, and I can see there's already a lot any listener can get to improve their finances and everything. So let's go on to, a lot of people are visual, a lot of people want to be able to relate to these things from stories of others that are similar to them. So can you give maybe one or two case studies of small business owners who have adopted technology to improve their financial management, and how this, the before and after, how this worked for them?
Yeah. A great example is last week. Actually, I don't know if you followed me on Instagram, but I actually posted this as a case study on my story. So we had a client that runs an agency doing just under £1 million in revenue. But as we kind of alluded to at the beginning, he wasn't actually making any money, right? So he was getting to the end of the year and thinking, where is that £1 million gone? So we sat down and we've been firstly working on tidying up the accounts so we can pinpoint where the issues are. Then last week we got on a call to use that data to help project and model the forward-looking piece, right? And that's using the tools that I mentioned. So now that we had that really good data, we were able to then say, okay, this is where the business is losing money, and really dig into those categories, right? In terms of how are you resourcing the work that you're delivering? How are you pricing it? What's your arrangement with various strategic partners? What's the long-term goal here? how do you benchmark against other agencies and other businesses of your size in terms of profitability and cash flow and stuff like that. So as a result of having that data in place and going through all of that system setup, we were able to have a conversation last week that is going to add 18% to his profit margin, which is worth over the next 12 months £136,000. And that's purely as a result of having data and a 1 hour call to look at that data and say, this is the issue, this is how it compares to other businesses, this is what you need to do to change it. And that's not, a drastic revolutionary change to the business. That's saying for an agency of £1 million, your gross profit margin should be X. You're at Y. Why is it that case? 10 minutes digging into it clearly showed that this client is way too reliant on freelancers rather than a permanent team, especially at that level of revenue. Therefore, an action point is, okay, which freelancers are at full capacity, or what roles are at full capacity? Can we bring them in-house and recruit permanently? Great. Okay, you've saved yourself, I can't remember off the top of my head, I think it was 19% on increase in gross profit margin, right? Just because we had access to the data and we were able to model that through on that call live because of the tools that we're using. So that's just the top of the P&L. And then if you look at the overheads, again, we pinpointed that there's a strategic partnership there that's eating up 10% of margin every month. He didn't actually even know he was paying that at the time. He just didn't have any idea. He was paying Stripe fees of £5,000-6,000 a month. Changing the payment provider saves him about £4,000 a month. So all of these different things compound, right? And you can only pinpoint those by having good data and a way of forecasting the impact. So literally within 1 hour, we have a solid plan that isn't drastic, that adds £136,000 to his bottom line. And also that's building out infrastructure and investing in team, in addition to cutting some cost. That's also additional investment and reallocation of where he's putting his money. That means next year he's going to have the management layer in place that will then support him to at least double his revenue. And all of that came off the back of putting in place Zero, doing his bookkeeping, like the boring stuff, to then have that conversation, right? So that's a really good use case from last week of how this can actually add 6 figures plus to your bottom line just by having good accounting in place. And that doesn't have to mean anything super complicated. It can be off-the-shelf software, just that's maintained by someone who is able to do that regularly and consistently. Like, that's all it has to be. And yeah, the comment off the back of that, which was the case study I put on social, was it said, this is the best 1 hour I've spent in the last few months. Because it just provides that much clarity, right? So he's gone from having no idea what is going on and why he's making no money to having a plan and complete visibility over how much money he's making now and how much he will be making next month, the month after, etc. And all of that came without any increase in revenue. So £136,000 of additional profit without any sort of growth on the top line. But all of it comes back to setting up processes that mean we can get invoices from his suppliers and influencers and people, to then have data, to then have that conversation, to then have a plan of action. So if people are like, it doesn't matter if that receipt comes, I don't send that receipt, or whatever it might be. But the bookkeeping and the records and the data is the core piece that's going to tell the story of that business, to then be able to have a plan of action that makes a real impact. And that's why it's so important to leverage technology, to have all of that admin stuff as streamlined as possible, but have it done very, very well, so that you can then have those conversations on a whim whenever you need to, whenever something changes in the business. And that's really where you want to get to.
Interesting. So, is there anything that we haven't talked about concerning this aspect of finances, about business, that you'd like, maybe something you'd like to, you from your experience, you want business owners to know about, it's important for business owners to know about? Is there anything like that you'd like to share?
I think we've had a very comprehensive conversation. I would say it probably always comes back to what is your end goal, because everyone has a different goal personally and within their business. Some people want to exit, some people want to earn £50,000 a month. And other people just want a lifestyle business that pays the bills. I think a lot of people don't think through what it is they're trying to achieve, and therefore their budget, their forecast, their tax planning, the way they structure everything and how hard they work, everything is misaligned because they've not gone through that exercise of what am I actually trying to achieve here. So I would just say one thing we've probably not covered much is the massive variety of what a successful business looks like and how that changes from person to person. I think every business owner needs to be very clear on what success is for them. It might be working 2 days a week and being able to spend the rest of the week with their kids, right? For another one, it's scaling something to 10, 20, 30 million, however far it will go. Having that clarity will then give you so much more, a much clearer path forward that saves you tax, that gives you predictability, that helps you sleep better at night, that makes you feel less stressed, all just because you've kind of gone through that thought process and know exactly what it is you're trying to achieve. It's not. Most people are very muddied in what they're doing with their business. They'd love to have the big business, but then they also want to work 1 day a week. But then they also want to make 20,000. But then in the back of their head, they're like, "Oh, I'll just be happy if my bills were paid." So it's just like you're really clear on what it is you want to achieve because it impacts everything or decision making going forward.
That's interesting. So we should all have clarity. It's very important to know where we're going and what we want actually. So can you share about your business, who your business serves, what your business does? So if any listener wants to reach out to you or to work with you or to learn more from you, they can get across to you.
Yeah, sure. So I run my business called Sidekick. We're an accounting firm. First and foremost, we work with digital businesses. So that's agencies, coaches, consultancies, and recently some e-com businesses as well. And what we provide is a completely managed service. So we want to be your finance team, and that can range from just doing your bookkeeping and giving you access to really good data, plus support from someone like myself on an ad hoc basis, all the way through to invoicing your clients, doing your credit control, paying your team, paying your suppliers, having weekly meetings for cash flow. So a full, complete external finance function that feels internal. That's kind of what we're trying to do here, and that we work with businesses from their startup stage all the way through to exit. So that's kind of our bread and butter. Alongside that, we work with all of our clients on tax strategy, similar to what we spoke about at the beginning. So proactive, got a really comprehensive process that has never failed to identify tax savings for a client. So we have an increasingly large focus on tax and that demonstrable ROI to our clients. And for us, it's about providing as much value as we can and measuring that and showing that to our clients so they can see exactly what we're doing and we can make better decisions around how we do that better going forward.
All right. So where can listeners best reach you? Maybe website or social media or anywhere?
Yeah. So, I mean, our website is sidekickaccounting.co.uk. But I'm pretty active on Instagram, so there's a lot of content on there around the stuff we've spoken about today. So my @ is Rayhaan Mughal. I guess, Peter, you can put a link or something in the comments.
Yeah, that's all right. So the link to your Instagram and your website, sidekickaccounting.co.uk, will be in the show notes once this goes live. So for the listeners, I hope you've learned a lot because I have learned a lot, and I believe that with this episode, you know the importance of clarity, you know the importance of forecasting, you know the importance of running your business with and keeping your accounts in view so you don't make any mistakes like me, like a lot of us before. So did you get any value from this episode? If you did, please share it to anyone you know it would help with. accounting issues, with finance issues. Probably they make like it's the agency talked about making £1 million, but having no idea where the money went to. And if you want to be the first to know when we post more helpful content like this for your business, don't forget to follow, like, and subscribe to the podcast on wherever you're seeing us, wherever you're hearing our voices. Till next week, we have over 70 episodes out. So 70 episodes, 7 days. You can listen to 10 episodes a day till next week when we come back with a brand new episode of the Tech Your Business podcast. So bye for now.